All right, we just got a little warning. This meeting's being recorded. So, Vipal, now that you know that you're being recorded, brother, welcome to Cup of Joe.
Thanks for having me. Thanks for having me.
All right, so I got to start with you always have an interesting way of telling people what your name is.
Oh,
So, how
it's
about
been
you
working
introduce
since
yourself?
first grade. It's my name is Vipal, rhymes with people. It's people with the V. Once you get it, you'll never forget it.
That's like, did you want to be an aspiring rapper when you were younger? Like,
No, I think I might have missed my calling.
people with the V is people, and a member of I don't know if you call it the Jerod Runde team, but uh,
RPM is our official title.
what is it?
RPM.
RPM.
Yep,
Which
Runde Patel McGrew.
all right. And interestingly enough, I think you moved out to Vegas first. Is that right? Is that the right order here? So you went, then Jared went, and
Incorrect, actually. Jerod made the move about 4 years ago,
okay,
and so he's been out here for a while. He made the move more for personal reasons.
hmm
He met a girl he fell in love with and made the move like many of us do. And he had been out here for about 4 years building the market and just kind of getting situated. And he had reached a position where he was ready to kind of expand and accelerate his growth. And I had at the time I owned a couple physical therapy clinics, but my background is in mortgages, and because of COVID, our clinics were shut down, and we had been shut down for about 6 months at the time. And so he asked me to join him out here and help him grow his brand out here and grow his business. And I can't lie, it was very scary, to sell your house in the middle of the pandemic, move 2,000 miles, not know anyone out here other than Jerod. Literally, we knew no one. My wife had never come to Las Vegas or Nevada before, so it was a new experience for her. But I will gladly say that it was the best decision we made. We really truly love it out here. You know, it's the hospitality capital of the world, and what that means is everyone you run into tends to be open and outgoing and friendly and want to chat. And because no one is from Las Vegas, I mean, generally no one's from the area. Everyone you run into is open to meet other people and to learn about where you're from and to talk about where they're from and kind of open up. And I think it's a nice place to be because you can have some great human interactions and you know everyone just wants to meet everyone else, and so it's a great place to be when you don't know anyone.
yeah, yeah. As a visitor to Las Vegas for the last 19 years, and probably a good 30 or so trips under my belt at this point. That I never thought of that, but I would say it seems completely accurate because when you're in a restaurant, in a bar, in a casino, in a drive, vehicle of some sort, everywhere, there's very few that their name tag says Las Vegas.
Right.
Um, most say somewhere else, and then yeah, they come with a story. Some folks have some amazing stories.
Yeah, yeah. I mean, there's been some. That's the thing about it. Like, it draws from all over the world. So I love it. I mean, I'm a traveler, and there's nothing I like more than meeting people from other places. I don't know if you can see behind me, but that's just pictures from the places I've traveled the last couple years. I mean, there's
Okay.
probably 7 countries represented up there. So being here where the world basically can commune, you know what I mean? And everyone's in a good mood and everyone's happy. I mean, obviously people lose money, but you've been here enough to know that people are still having a good time and people are still enjoying themselves. And there's just something infectious about that. Like, I had come maybe 12 times before moving here. And I mean, I came for the same reasons as most people do, just to go hang out on the strip, to enjoy the festivities. But I hadn't really experienced outside of the strip. You know what I mean? Like coming out to the suburbs and seeing how it is out here. And yeah, it's beautiful because I mean, every third person you talk to came here literally just to build a new life. And they're optimistic about what their prospects are. And there's something infectious, like I said, about that, where we're trying to build a new business, we're trying to gain momentum, and all we're running into is other people trying to build and grow and hustle. And it's nice, you know what I mean? Like it really, it's a nice place to be, you know what I mean? It's a nice incubator, I guess, is the best way to determine.
So I promise we'll talk mortgages in the real estate industry,
Yeah.
but I gotta know. I'm a person that tried to get my wife to move to Las Vegas starting from like when we bought our first house in
Yeah.
2004. So your wife had never been to Las Vegas,
Nope.
um, and you had not really been thinking, months ahead of time. Oh, you know what I'm going to do? I'm going to move, cross country and get back into
Hmm.
the mortgage industry. So, I mean, like, that's a hell of a sales technique.
I'm good at what I do.
Can
That's
you explain the close on that one? Was it a
the
soft close or a hard close? How long did it take? I mean, like
thing.
I'm kind of being facetious with the terminology, but seriously, like, how did that all pan out for you?
It's funny because it was more of a sales pitch than you realize. Because here's the thing about my wife: she's born in Rochester, but she spent most of her time living. Her parents, sorry, have a private beach off of Mullet Lake, and so up in Indian River. And so she grew up on Mullet Lake with a private beach for 15 years. After college, she moved to Washington and lived on a sailboat for 2 years. And so she's a water baby. That there's no ifs, ands, or buts about it. Like wherever we go, we go on cruises, we go travel where there's water because she just has to have that. And truth be told, I'm an Aquarius, and same way I just kind of crave and I love water. But the best part was I talked to my partner Jerod about it, and he started sending her video. Because what people don't realize is once you leave the strip and you go into like Summerlin, it looks like you're in Beverly Hills. You know what I mean? Like the houses are beautiful, the streets are manicured, there's greenery everywhere. Like, and the one thing I think that we both underestimated was the beauty of the mountains. We're both obviously from Michigan, so we appreciate a beautiful lake or a beautiful water view. But the one thing with the water view is you have to be on the water or near the water to enjoy it. We
Sure.
live in a valley surrounded by mountains. So it's amazing because anytime you get in your car and you're driving, you have just beautiful tableaus in front of you. I mean, every morning I wake up, I can see the sun rise over the East Valley. I can see its sun over the West Valley. And it just is stunning. So I had Jerod send her pictures of that. We actually came down for a visit in July when the entire strip was shut down, and we rented electric bikes and just rode up and down the strip and went downtown and kind of showed her what it was about. But I think that was the best part of it, because if she had come with the strip open and crazy, I think she may have had more hesitancy. I brought her when the strip was closed, and I showed, because I wanted to accentuate the non-strip life. Because I mean, let's be real, living here, that's what you're focused on, right? We don't go to the strip. I mean, I go to the strip when people visit. That's about it,
Yeah.
or for a show or a nice dinner. So that, because the strip was closed when we came, it allowed me and allowed us to focus on outside of the strip in downtown. You know what I mean? To show what else Las Vegas has to offer. And what's nice is it kind of dovetailed into what Jerod and I are trying to do. And, this is a booming valley, and people are moving here from California, from Texas, from Michigan, obviously, Iowa. But I think one issue that people have is the same issue my wife had or your wife has. They don't know what Vegas has to offer once you step outside the strip. They don't understand that how beautiful it can be, or the restaurants or the nightlife that you can enjoy without ever having to worry about a casino. And so what we started to formulate our first plan on for the RPM team on the marketing side was to basically take videos and film all the beautiful spots and all the wonderful restaurants and all the great places to hang out off strip, and to show that it's a great place to live. Because I mean, I can bear witness to that. You know what I mean? Jerod's been here 4 years and loves it. I came here about a year ago now, and I had some trepidation, and I wasn't sure if this is where I wanted to be long term. But within a few months, I mean, I knew that this was a great place to be, and somewhere I could easily see myself, putting down roots.
Sure. So that's a good, I guess, kind of follow up. Do you have kids? Do you wish to have kids? And what's the thought about kids in the area? Because that's the secondary concern from, like, say, my wife and I think many spouses on the female gender side.
You hit it on the head, and that's actually a topic of conversation, because we are actively looking to have kids, and that was a consideration. And when I first moved here, I told my partner straight up. I said, if we have kids and I don't feel like it's the best place for them, I can give you 5 years, but I'm not going to put them in a place where they go to school and I don't feel like they're getting the proper education. I mean, I'm Indian, bro. Education is everything to us, right? Like, I will move my family wherever I need to. I
Yeah.
don't care where. I'll move them to a boat on an oil field, oil rig in the middle of the the Caribbean, if you tell me that they have amazing schooling. You know what I mean? So that was the consideration that we always had in place. But one thing I have noticed since I've been here is that, yes, overall the valley isn't the best place to raise your kids. The school is not great generally, but you can find little pockets, little areas where you have amazing schools. Like Bishop Gorman in Henderson is known as one, a top magnet school. I'm in Summerlin, where the schools are I would say on par with like a Plymouth Canton, type. So there are districts where you can find in schools where your kids can get education. I mean, here's the thing: the city's mature. You know what I mean? And it's natural part of progress. As the city matures, as the people that move here mature, they have kids. They want their kids to go to good schools. They don't, what I mean? Everyone has the same concerns, regardless of where you are. We're all over the world. You want better for your kids than you have for yourself.
Right.
And the people in Las Vegas are no different. So they're actively trying to improve, what I mean, the lifestyle for their kids in terms of school and things of that sort. So I think it was a concern when we first made the move, but now that I've been here and I've been able to speak with some parents and meet people that have lived here for a number of years, I think it's kind of reduced in severity. You know what I mean? Like I'm not as nervous as I once was.
Sure. All right. So I promise we're going to probably circle back to this because I have actually some follow up, and I think one will lead into the other. So that's a little bit of your background, but you just said that you were in mortgages and then you had 2 physical therapy locations, and now you're back into mortgages. And I'm just kind of, I guess, curious, like, how does that transition work?
So, I mean, I can give you the long story or the short story. You want a deep dive on me, or you want to keep it a little?
I got time, brother.
Uh,
Dog just joined my conversation, so you
okay,
speak. I'll hear you. I'm going off camera for a second to close this
okay,
door. Well, keep on going.
yeah, no worries. So, my background, I've always enjoyed talking to people. That's always been meeting people, talking to people. That's always been my favorite thing to do. My father and brother are engineers, so that's what I studied in school. But once I got done, I hated it, and I wanted to change. So I went and I got degrees in marketing and finance because I figured business related, I could talk to people. And so I basically just did sales. I became after college, I hustled hard and I became the head of sales, lead sales trainer for T-Mobile in Michigan. And after 5 or 6 years, I was able to get buy my own store. Now that was extremely successful. I was able to hire my friends. Actually, Jerod worked with me for a little while, um, and I kind of got to learn the business side. And it was amazing because you're working your face off. I'm working 100 hours a week. You're grinding, but you see the benefit. You know what I mean? Like I'm getting the money in, and I'm seeing the financial rewards. So it was great in that regard. But it was 2007, and I was looking at my numbers, and they were going down. Every month, I saw a slight decrease. And so I said, you know what? I was getting great offers. We had the number one store in the tri-state area at the time, so I sold high. I luckily sold about a month before the economy crashed.
Yeah.
And so my original plan was to go back into business, but the economy crashed. And I didn't want to invest or start something new at the time. So I took about a year off to travel. I went to probably 15, 20 countries, traveled all over the US. I had friends all over the country. So I just basically couch surfed and saw a lot of our great country. And during that downturn, having money in my pocket, having that freedom, I guess it kind of gave me a bit of an epiphany in that, maybe the accumulation of wealth isn't all there is to life. You know what I mean? Like maybe I need to focus more on helping others.
Hmm.
And so I kind of came out of that year of travel changed. It wasn't just about making money. It wasn't just about getting a dollar. It was, how can I help someone in the process? You know what I mean? Like, where can I find a field where I can make an income to support my family, but also do the best I can for others? And so at the time, obviously, we had a housing crash, and there was, everyone was looking to refinance and get out of these horrible mortgages. So I joined up with Quicken. I moved out to Scottsdale with them, and I loved it out there. Worked for great people. They had great staff out there. Tim Bergmeyer's amazing. I still love the guy. Unfortunately, I made a decision of taking a position back in Michigan, moved back. Wasn't for me. Anyways, I realized that maybe the way doing mortgages in that way, selling mortgages the way that a big box company wanted me to sell them, removed the ability for me to really provide as much help as I wanted for my clients. You know what I mean? Like in a big corporate place like that, it's always moving on to the next person. You're always looking at the next deal, the next deal, the next deal. And I wanted to be able to spend time with my clients and truly help them in their situations. And in the process, I helped out a guy who was a financial advisor. And so he recruited me to help there. He said, there we can make a difference. I help people put their lives in order. So I went over to financial advising and I found great benefit in it. I love selling life insurance because it's a product I really got behind because it's something that gave you stability and security. Where I didn't think about where I failed is I'm not a gambler. So when you're a financial advisor, your clients expect you to make them a nice return. If
Uh-huh.
you trust me with all your savings, if you worked your life to make those savings, I'm sorry, I can't gamble with it. I'll get you an amazing 2% return, but I'm never going to go risky because if I lose $1 of your money, I'm not sleeping. You know what I mean? And so, as a financial advisor, it's not exactly the right fit.
Sure.
And so, I kind of, and I'd always loved real estate, and I'd always kept one foot in the door. I had kind of uh, done. I was a realtor part time at the time. You know what I mean? I would just help out on the side, and so I decided to go full time into real estate. And once again, loved it. I love being a buyer's agent. Love people helping people find their homes, finding that perfect situation. It was something I really really enjoyed. Um, but the issue I had, and it's something that had always popped up, is in high school. I played football at Plymouth Salem, and I ruptured 4 discs in my back. And since then, I keep re-rupturing those discs.
Yeah.
And the life of a realtor, as you know, is car heavy. You're driving all over the place, and it was really, really putting some stress on my back and causing me a lot of issues. And one of the clients I had sold a home to was a physical therapist and had been in business for 20 years. And so he started working on me on the side, and he changed my life. Gave me back mobility. I could get rid of the cane. I was able to function like a normal human again. And I really believed in what he did. He had studied in Amsterdam, and it's a little bit different than the normal physical therapy you get in the U.S.
Hmm.
They put their hands on you, and it's basically a mix of massage, chiropractic care, and U.S. physical therapy. And you kind of pull them all together, and that's how they teach it in Europe. And so I became a believer. And so basically, I just started, talking about the gospel of physical therapy, and yeah, everyone started asking for names and numbers, and we partnered up and started opening clinics because I wanted to get people right and have them feel better. But then obviously COVID happened and that kind of put a damper on things. So when Jerod called me, the big thing that he told me, and the one statement that he said that really jumped out was, I'm at a place where my business is at a point where I can truly help people. You know what I mean? I don't have to worry about every single deal or trying to maximize and this and that. Like I can truly work with people and give them the time that I want to, and I don't have any stressors above me dictating what I can and can't do. And so it was something that I really liked because during that change, what I realized is I stopped becoming a salesperson. I don't sell. I don't sell at all. If anyone asks, I don't sell. I speak the truth. I tell you what I believe is the best options for you. If you agree, cool. If not, cool. I don't push people. I don't harp on them. I don't yell at them or anything like that. I try to give you what I believe is the best information, and you can use it as you see fit. And what we found is when we've taken this kind of hands-off approach, you know what I mean, just more, let's say, educational than selling, I found it genders a deeper connection. You know what I mean? Like you're coming from a different place because you know I, it's almost like you're getting into the opinion of an unbiased third party because at that point that they can speak the truth without it materially affecting them, and that's how we try to live. You know what I mean? Like if you call me up and I think it's a bad move, I'm going to tell you it's a bad move,
Sure.
and that's that's the way we can sleep at night, and that's honestly that's the way I look at long term business. Like if you're not treating your clients like they're your family, then you're not going to be in business for that long. You may have success off the jump. You may do really well in the first couple of years, but you're not going to have long term stability. You're not going to have a long term business unless you treat people the right way and they feel comfortable with
Yeah. No,
you.
I
So yeah,
know.
long story short, that's how I got to where I am.
No, it's awesome. It's a good, it's a interesting, pathway and stuff. And it's funny because back in 2005 or six, um, one of my first, jobs out of college was at Quicken Loans.
Okay.
At that time, I had a relationship with a lender, mortgage broker, because they had done, my own purchase and refinance, and then helped me out with a scenario for my parents. and that was like a pretty crazy scenario. So I thought about that, every day that I was working at Quicken, and kind of what you just said was I had no real problem with Quicken, and actually, if anything, I don't think they get enough credit for not dabbling with subprime mortgages at the
Yeah.
time,
Yep.
not getting involved in all those crazy things, and not doing. I mean, you could at that time maybe get a 580 credit score
Mhm.
through, but you really needed like a 600 to 620 for most of their products. And this was the time that people were doing 500 credit scores
Yeah.
sometimes.
Oh yeah, yeah. Stated income and
Yeah, I mean, it's
yep.
crazy. So, they had a couple of products that don't exist in today's world, but they weren't, and they don't get enough credit for that. On the flip side, they don't get recognized enough for this like sales volume. It's
Yeah.
like call,
Yep.
and get in touch with somebody, make some dials, make some contacts, and make some sales.
Mhm.
And so I remember helping a guy who needed to refinance. He needed a cash out refi
Mhm.
because he had, tons of credit card debt basically. And, call it what you want. And maybe it's not always the best plan, but for some folks who are never going to get out of this credit card debt, um, rolling it into their mortgage is a good thing. Uh,
Mhm.
and I would think in general, we don't want to just stack up our mortgage debt either, but a much better scenario to add 35,000 at the time, probably around 6% interest, than have the same amount basically over a 25-year term is kind of how they factor that.
Right. At
Um,
22% or whatever
yeah.
they. Yeah.
But I also remember thinking to myself, my friends over at the other company probably could have done more because
Mhm.
because they did have more products available as a broker versus one specific lender, and so kind of like you, I just didn't enjoy my time. Well, you didn't say you didn't enjoy your time, but I didn't enjoy my time, and kind of like you because I felt I could be helping more somewhere else. So I joined them, and I became
Yeah.
a loan partner to two of the brokers and owners and stuff like that, and stayed around for a while, and eventually just figured this isn't the life for me. It's
Mhm.
ironic and funny. As a 23, 24, and 25-year old with no kids, I was married, but I was like, these sporadic hours and all this stuff is just not my lifestyle. And then I have two kids, and we started a moving company, and then sold that off and transitioned into real estate. And I'm like, yeah, now that I'm getting older and have a family and a dog and stuff, now I want crazy hours,
Yep.
inconsistent income,
Yep.
all these things. So it's interesting, but that was kind of my path into it. And so I have some experience on the mortgage side, and knew a lot about title and stuff prior to getting into real estate. And so I personally lived it because I owned a home, and I was involved with the beginning part of the crash. I mean, I had
Mhm.
the beauty of being a mortgage broker is getting all these banks to come into your office and pitch their programs.
Yeah.
And I can just remember guys coming in saying, hey, one of them was Bank of Arizona, who has not, who went out of business. Surprise, surprise. And they came in and they said, well, we have this not reverse, we have this negative amortization mortgage where the client has four options. They can pay their normal principal and interest. They can pay um, like interest only, but there was
Mhm.
and then there was like, well, we could also go where basically you make some form of a payment. I don't remember if it was interest only or not, but they tacked on what you didn't pay to your mortgage balance, and it would allow you to go up to like 110 or 115% loan to value. So you had negative equity,
Amortization.
plus
Yep.
negative amortization,
Yep.
and we didn't do any of them. And we did business with Bank of Arizona for other loan products, but not that one. But I mean, this guy was like, guys, you can get paid 4 points, which was 4% of the loan amount.
Yeah.
And at the time, there were no restrictions. So really, the company could have charged, say, a 1 point origination fee, your normal closing costs, which you got a little bit as a lender, as the
Yep.
banker or whatever, plus this 4%. I mean, and all they were saying was, hey, just tell your clients it's a tool in the toolbox. They could pay the principal and interest just like on your other loan that you're selling from Chase or Bank of America or whoever. Or they have these other options, or maybe they want to, at the holidays or something like that. They want to go on a nice vacation so they could go interest only that month. It's just nice that they have those choices, and it's like, now, this is a bad idea. And I remember,
Sometimes too many choices is a bad thing.
yeah,
You know what I mean? Especially like that. Like if you look at basic human psychology, if you have the option of making three payments, $1,000, $500, $200, and you get used to making that $200 payment, making that $500 payment is much more difficult. You know what I mean? Or if you're making $1,000 payment and it hurts, you might skip to the $200 payment and just it's a recipe for disaster. Certain fiscally sound and savvy borrowers can make use of it, and they could really utilize the program the way it should be used. But it's bad news bears. That's the way I looked at it. And
yeah,
honestly, to go back to what you were talking about at when you worked at Quicken, one of the issues I had is, like you said, I didn't mind working there. I like this. I like the company. I like the philosophy. It's the sales approach I didn't appreciate. If I had someone talk to someone that, for instance, I had an older lady that was a widower. She couldn't afford her mortgage payment anymore, and she didn't know what to do. And I was talking about a reverse mortgage actually at the time. I
hmm
was like, this is a way for you to stay in your home the rest of the way. Your kids don't want the house. You know what I mean? You can keep your house. But she was just unsure. She had never heard of it. It was a new product. And so she wasn't sure. Now, in the philosophy we were told there is if someone's unsure or giving you pushback, move on to the next person. But I couldn't do that. This is a lady who had worked her entire life. Her husband had built that house. They had been there for 60 years. She had nowhere else to go. I couldn't just walk past. I was the expert. I knew that there was a solution that would let her stay in that house and keep her lifestyle. She just didn't know about it. And it was incumbent upon me, and I think as a good human, to kind of make sure I gave her enough time to really think about it and gave her enough information to really be informed and be patient enough for her to come to that decision on her own. It's one of those things where, they don't want you to call a second or third or fourth time. I'm not going to give up on somebody. If I think it's going to help them materially, it is what it is. And it's interesting working here because we are a direct lender, but it's interesting because we're the number 3 largest lender in the country that no one's ever heard of.
yeah,
What we say is we're the largest, we're the smallest large company in the country. In the country, we have 10,000 employees. No one's ever heard of us.
yeah,
But it's because we operate in a different way. We're not out there grabbing leads and trying to convert everybody in the world. The philosophy we really subscribe to here is, treat every client like your only client every single time. You know what I mean? One-on-one contact. Take your time to really build that rapport, build the situation, get a feeling for what they really want, because you can help them on this transaction, you can help on the next transaction, you can help them, 20 years down the line if you set it up correctly, if you could help them build their plan correctly. You know what I mean? And that's what I appreciate the most here is that we have the freedom and the opportunity to really spend as much time as we deem necessary to help our clients out. And we don't have, someone above us yelling at us, trying to tell us to move on to the next one or something like that.
yeah. And I think you also don't have the scenario of, okay, interest rates dropped 0.5% in the last 30 days. We're moving everybody from the purchase side over to the refinance side. If
No,
someone's trying to purchase, they can take 60 days to close. We'll do the refinance and make some money. Okay, interest rates went up. There's a lot of purchase transactions. We're going to lay off all the refinance team, and then we're going to have purchase only. The refinances are going to take 75 days to close, and we'll do the purchase really. I don't think you have that going on, and that's
no,
a big advantage. And one of the reasons that I continue to work with you guys is that and many other reasons that we could get into.
yeah.
Um,
Yeah, I mean, like I said, we're a direct lender, but the nice thing is the way that they've allowed us to set our team up is we operate without any constraints. We don't have any handcuffs on us. We run our business the way we want to. We can focus on what we want to, and I mean, we have basically the freedoms that brokers have, but with the stability and the backing of a direct lender.
sure.
And that's what's nice about it. And then we have all the credit repair resources. We have all the marketing resources that are available to a large corporation, but without the normal handcuffing that goes along with it. You know what I mean? And that's kind of why we liked it, because it was kind of a best of both worlds scenario.
Well, I think I'm friends with and do business with someone who is, still on the brokerage side, and
Mhm.
then people that are direct. And I don't know that it's as big of a discrepancy as it used to be because you have Fannie Mae and Freddie Mac, for the most part, guiding just about everything now.
Yeah.
And unless you're literally independent and you're making your own guidelines and not getting secured by the government,
Yeah.
then the products don't drastically change. Yes, there are a few things that are different, and yes, sometimes someone might do Mishta and someone might not, or little stuff like
Right.
that. But at the end of the day, it's not quite the same as like when we had, Bank of Arizona, Chase,
Yeah.
City,
Yeah. Yeah. Yeah.
Bank of America. I
15
literally
years
had,
ago, a broker may have 30 products to choose from, and a direct lender may have four. You know what I
correct.
mean? And so it made a lot more sense to go where someone may have the perfect fit for you. But like you said, after the crash, the government regulated everything. Now everybody has the same products. We play in the same on the same field at the same rates.
Yeah,
It really kind of comes down to service and speed of service. Also, I mean, quality of service management, also speed.
and unfortunately, I think back then when you needed a mortgage broker, it was probably because you needed to go no income, no asset, no
Yeah,
job,
you had an unconventional situation or an unusual situation that you need to
yes.
sell.
And,
Right? Yeah.
and at the time, there was only a couple of big lenders that were doing that. And what do you know? They're also out of business today, like
Yeah.
Countrywide, who's the
Yeah.
former.
Exactly. Countrywide just disappeared from number three lender to gone.
So, apparently they had some things wrong. And we can only laugh about it now because you can either laugh or cry, first of
Yeah.
all. And then also, fortunately, it's now between 8 to 12 years behind us, depending on where you live and your
Yeah.
specific scenario. And probably by now, if you're in the exact same home, you've not only gained back what you lost, but you've probably surpassed it. And I know
Yeah.
there are pockets of our state and of the country that's still not true.
Mhm.
For the most part, that would be true. Um, so I think that kind of almost. And you asked me how do I prepare, and I said just tell me about yourself and we'll go right.
Yeah.
And so here we are. Just naturally, we've flown right into all right. Now it's present day. It's
Mhm.
July 2021, and number one, there's an inventory shortage across America. Number
Mhm.
two, interest rates are still low. They're maybe a little higher than they were at the beginning or the end of the last year, but they're still pretty damn low.
Yeah.
Um, it's actually kind of getting a little bit harder to get a mortgage. I feel like some conventional mortgages are almost requiring a 700 credit score, or they're doing something. So we got all these things, and I think the first question that comes up is, are we in a bubble, and if so, when's it going to burst, or are we heading into another recession? And I answer that question all the time, and I try to say as often as possible what we believe is the case. But I guess I'm looking for not support, but a secondary opinion. Are we in a bubble? And if so, is it going to pop? And if not, why not? And then also, are we going to crash? Are we going to have a recession sometime soon in the next 6 months to a year with these prices going up and up and up, and the things that we're seeing in the market?
I, I I I definitely think that we're going to hit a ceiling when it comes to the pricing. If you look at basic economics, you reach a point where you're going to outstrip demand. You know what I mean? Or sorry, the pricing is going to get to a level where demand won't keep up with it. You know what I mean? Like you're pricing yourself out of the market at some point. There's only X amount. There's only so much someone's willing to pay to live in that area, so or have the money available to put down on the house. You know what I mean? But the way I look at it is, I don't think it's a bubble necessarily, because I think what we're seeing is what you just touched on. People are finally seeing that equity growth and the value increases that I think we would have seen in a normal market in 2007 hadn't happened. What happened was that was super heated, way overinflated, and everybody in the world got mortgages. And I mean, the thing that we never talk about 2007 is the issue wasn't just the mortgages; it was how many people were pulling equity out of their homes to buy things like boats and motorcycles and everything else that you put yourself underwater if there's even a slight correction. So I think what you have now,
I'm sorry to jump in because
yeah,
that's really annoying on a microphone, but if anyone's watching, then I am, putting my hands together because that is one of the first things I try to point out is that equity in the marketplace today versus then is so different.
hmm
So first and foremost, you have these weird mortgage products that don't exist. Secondly, everybody was pulling equity out to do other things or take care of themselves or whatever. So not everyone did it for bad reasons,
so of
right?
course, yeah, of course.
Some people just did it
Some,
because they were like, well, wait, why wouldn't I? Like,
yeah, invest in the market, or because someone got sick, or you want to do a renovation. No, I mean there were all kinds of reasons for it. You know what I mean? The issue was everybody was doing it, and I think what we've learned now is people have learned that you save that for when it's necessary. You know what I mean? You don't just try to use the equity stake willy nilly or be on a whim. It has to be a thought out, calculated move and a plan. And you're 100% right. Based on what writing mortgages 12, 13 years ago, the people I talk to now are in a better position. They are better educated, and generally they have more equity, not just because their the values increased, but they got smarter about how they're making payments. I mean, I can't tell you how many people I know right now are making double payments, paying every 2 weeks, or making extra payments when they can, because they've learned that you can really, really pay down your principal that way. Simple thing, paying twice a month. You can knock years off your mortgage doing it that way. Instead of once a month, it's an extra payment every year. They go straight to principal. So it's one of those things where I think the consumer themselves have gotten savvier, and they're understanding their property a little better. I think we since the 50s we were on this swing up where you thought if you buy property, it's automatically going to appreciate in value. It's a piggy bank. You never have to worry about any fluctuations, things of this sort. And obviously it's like touching a hot stove. 2007 was touching a hot stove. People learned their lesson,
yeah,
and I think they're a little more careful than they used to be. And you know, I think there's some silver lining to what happened because of that. It knocked all the dirty players out of the industry, which is awesome.
hmm
Like you were talking about, people that were pushing negative amortization or just stated income, stated asset loans that had no backing or whatever. It pushed all those guys out of the market. It made the government pay attention, which generally is a bad thing, but in this one, I'm not really minding because sometimes you need someone to mind the store. You can't let you
yeah,
can't let everything just kind of go wild. And but all that is what leads me to believe that this isn't a bubble that's going to pop. I think we're going to see a little bit of a decrease in pricing, but I think that's going to be because we're going to see an increase in inventory, not because of some kind of change materially in the market or in demand. I think we're just going to have a larger supply. I think people have been holding off. They've had time to redo their homes. Especially COVID, you sat there, you stared at your four walls, and you realize you need more than
yeah,
that. You
yeah.
know, I feel like we're seeing it a bit in Michigan actually. Like a lot of our realtors in Michigan are starting to see a little bit of breathing, a little bit of slowdown in the skyrocketing prices. In Las Vegas, it hasn't occurred yet. We have other constraints here. We're a valley, plus the government owns basically all the land
hmm
around Las Vegas, so it's a very small box we can play in. So it's artificially constrained basically. But I mean, from what I can tell in Michigan, it seems like it's kind of the market's breathing a little bit better than it has in a while. What do you think?
As a whole, I would say that answer is yes. And again, I can certainly point out areas and price points that that's not the case still.
Mhm.
But I think some things too are, as agents, our job is to get our client the best deal, and that might mean financially, it might mean, something else as far as like what they're looking for in the house.
Mhm.
There's a lot of different ways you say that. But when you're working on the selling side, yes, multiple offers is good because we can go through the resume, so to speak, and try to pick the best candidate, right? But at the same time, I think that it's crazy to get 20 and 30 offers, in a matter of 36 hours. And so I think some agents are starting to kind of start working with the seller to say, all right, if we start getting offers, we got to call it at some point and,
Mhm.
move on something. Um, Keeping in mind, you might, have the best offer rescind their offer if you wait too long too. So there's
Yeah.
that, talk about gamble. It's an analogy I suppose to make because you got to kind of try and figure that out. and because of that, I do think that it's been a little bit less crazy with, well, I got 27 offers and I
Mhm.
sold a $350,000 house for $425,000. However, I think that because of what was going on, people are coming in as a second showing on a house and just automatically writing their first offer, for some amount over, sometimes
Mhm.
30 grand over. I had a client go look at a house that was listed for 675, and that's not the average price point in Southeast Michigan. It's a few $100,000 higher than standard. So 675, and they wanted to write an offer for 695 and give that $20,000 guarantee. Meaning, if it only appraised at 675, they were going to give the 20,000 more. And the guy was like, "Well, I can save you some time. We have an offer for 55 over with a $30,000 guarantee." And while I appreciated that, we were like the fifth people into the house. So somebody right off the bat was like,
Yep.
"Here's a crazy offer." So I think that's so we're still seeing some weird numbers or some odd numbers, but we're just not running into the scenario where on a Friday I schedule for Saturday and then it's canceled. Like
Yeah.
we're kind of getting through and seeing an extra day or two out of inventory and
Yeah.
stuff like that. And I do believe, to your point, what will eventually occur is even the people that are staying put today will be moving in a year or two. So we might not be quite near the end of this kind of short inventory, but at some point, more people say, now the average sale is up, 13%. And I know that we put 20 grand into the house during COVID, but we could probably get like an extra 30 grand plus what we were going to,
Yep.
and maybe move,
Yeah.
and with some more houses. I personally have clients that would move, because I
Yeah.
have I have clients that are sitting on the sidelines saying, I
They
can't,
want somewhere to go.
yeah, like I can't
Yeah.
buy, I'm too
Yeah.
scared, you know. So yeah, it's a very different market for those, those and many other reasons. Tell us more, what's going on the mortgage side of the industry. Everything pretty much is now backed by Freddie and Fannie,
Yep.
and you, regardless of, sometimes you even have your sheet in front of you, and then you go to put it in, and it still doesn't fit, right?
Yep.
So tell me more about that. Like, how does that happen? Oh, this guy's going to be conventional. Actually, we can't go conventional anymore. I put it in and we can't get that. Why is that occurring? And do you see that as a good or a bad thing for the overall marketplace?
Well, you can have changes, going from conventional to FHA to VA to MISHDA, to Home Ready, whichever program. The issue that I think people struggle with when thinking about whether they qualify for mortgage is there's not one determining factor. We look at 3 to 4. I mean, there's three major: credit, income, and then the value, loan to value. But those can interact in odd ways. And because Freddie and Fannie have their stipulations and they're different than each other, that's one thing to keep in mind. They have two different sets of rules. Like,
Mhm.
we can look at a case and say, you know what, this one is better suited for Freddie Mac. This is better for Fannie. You know what I mean? It's unusual, but that's the game we play. You know, uh, there can be unusual things like not enough assets, which generally isn't a concern on, like, let's say, a refinance where you don't need the assets, but for whatever reason they want you to have X amount of assets before they're going to allow you to use that program. Or, I mean, certain programs it's too much income, honestly. Like, some of these programs are only developed for people that are at a certain level, and if you make too much income or your credit's too good or you have too much money back, and that's the craziest one that I think I have to explain to people, is they have too much money saved.
Yeah.
It's counterintuitive. It sounds insane, but I don't make the rules. I just try to,
Sure.
play with them. But the one thing, what the mortgage industry is really going to right now is because our hands are tied on variety of products by the rules and regulations, which I am all for. I really appreciate them, and I really like this aspect. It's forced mortgage companies to be smarter on and focus on customer service, client relations, making sure we do right by the client and we treat them the best way possible. Because that becomes a differentiator. Everyone has the same rates. Everybody has the same programs. How do you stand out? How you stand out is by going above and beyond. Like for what we do is we do a 10-day guarantee for buyers. If you can get me your information so we can get you approved, we can guarantee that we'll close that loan within 10 days, because when you're going up against a cash offer, people are usually reducing or disregarding your finance offer because they think it's going to take too long or they're unsure. Well, what we're telling them with the 10-day guarantee is we've already taken a look at their financial situation. They are good to go. We have everything ready to rock. We can close within 10 days. And then we guarantee that if we don't, we will pay you $250 a day every day we're late. We've never had to pay it because we fly. Last one I did, I think we closed in 8 days instead of 10. But what I love is the standardization of the products has forced mortgage companies to become much more customer service driven and focused, which fits my narrative because that's what I appreciate. You know what I mean? I'm not out there. I don't care about rates. I don't even look at a rate sheet because we all play from the same rate sheets, right? What I care about is what's going on with my client. How can I help them? And what is the best position? Where is the best place for them to be? And so what this kind of structure has done is it has forced our industry to be more client focused and less product focused. And I love it. I think clients are going to benefit from that.
Yeah. Do you have an easier or harder time doing a guarantee like that between Michigan and Nevada?
No. It's actually, I would say this, it's easier in Nevada because what we have here is Nevada, the market is driven by money from California. So you have all these people that are cashing out of their homes in California. They bought them 20 years ago for $300,000. Now they're valued at 1.3 million. Mm-hmm. So they have $1 million that, and they probably pay the mortgage out in the meantime, but they have, $1 million in cash to use. And what they've realized that, that $500,000 house in California, which is a shack by the freeway, in Las Vegas, you can buy a home with a pool, infinity pool with great views, that type of thing.
Sure.
And so they started just dumping their money into California, into Las Vegas, into the valley. So you're just seeing cash buy, cash buy, cash buy. That actually takes me back to what you were saying about multiple offer situations. What I hear from local agents is that their biggest frustration is these California buyers will put in 4 or 5 different cash offers, sight unseen, on these properties, get them all accepted, and then they will, use the inspection period to kind of pick and choose what they want to actually go with. Yeah. Which is completely and horribly unfair to all the other buyers and completely unfair to the sellers, right? Because you're wasting their time and energy. Yeah. But they don't care because, they're not beholden to anybody, obviously. So what you were talking about with multiple offers actually really, really fits in here, because what people are finding is that an offer submitted is only as good as the person submitting it. You know what I mean? Yeah. And that sometimes it's a little more, it's a smarter play to work with someone is serious than just jumping at a number because you see it. You know what I mean? And that's sorry to go off on a tangent, but I was thinking about that when you were talking about offers, and it's something that they deal with here. But so in Las Vegas, because of all the cash coming in, finance offers have to be as pretty as possible. And obviously the easy way is people try to guarantee, appraisal, they try to guarantee or waive inspection, which no comment on that one.
Not a big fan.
So someone like that, the 10-day guarantee is nice, because when I call that selling agent and I tell them, hey, my client put in an offer, wanted to let you know it's fully underwritten, it's good to go. Like, there are no constraints or issues that could slow this down, other than obviously an appraisal, which in this market isn't really slowing it down. It's basically the same as cash. You know what I mean? And the agents have learned that really quickly, that if we call with one of these 10-day guarantees, like, you can count on it closing. It's not going to fall out. It's a good loan. And I think it gets more play in Las Vegas because we're running up against cash much more than we are in Michigan. Mm-hmm. But yeah, it's somewhere, it's something that should be utilized everywhere. I obviously.
Yeah. Well, that phrase "tool in the toolbox," was used inappropriately when you're trying to sell, negative amortization loans. But yeah, it generally is it's generally a good phrase and a good thing to have, right? something extra in your side, something extra in your bag that you can pull out
Yep.
and use, accordingly. And kind of to your point, to your, people writing and getting multiple offers accepted. That's a conversation that I've had for the last 5 years. People will always ask, can I write more than one offer? Well, what if they both get accepted? And my answer is always, well, we're really going to have to be really case by case, and it's something that we can do, but it's certainly not something we want to be doing on a
Yeah.
regular basis. And I say partially because I am going to stay in this industry.
Yep.
So if every
Yeah.
time I send an offer to people, I rescind it, or every time I send it, we basically pay for an inspection just so we can, cancel the order. Um, you're going to stop accepting my offers,
Yep.
and that's going
Yep.
to screw a client who is legit. Um,
Hmm.
so I can count on one hand how many times I've done that. You know, and I can give a lot of good reasons for why you would do it, especially if you're probably not going to get one accepted. But it's like, well, I'd love this house. If I could do it at this price, I would do it. But now I could probably be the best offer on this house. That's a gamble. Maybe that's worth taking.
Right.
Um, Knock on wood, I haven't had any of both of those offers accepted. And as long as I don't make it a steady practice, I'm sure I never will.
Yeah.
So
Yeah. Yeah. Yeah.
yeah,
Yeah.
it's
It's one of those things where we were talking about saying, doing this long term. That might be a good plan for short term. You know what I mean? But like you said, as an agent, no one's ever going to trust you again after that.
yeah.
And I don't know. I just, I guess maybe I shouldn't be equating my own, I guess, not morals into this or whatever. But it feels dirty because you're messing with other people's money and you're messing with their livelihood and the seller's lives. You know what I mean? They could be turning down an offer from a qualified buyer who needed to have that house or whatever because you just, I don't know. It's something about it just kind of I don't like very much.
Definitely not a good practice because to your point, I might have brought you a great offer, but this one's cash and equivalent, and so it
Yep.
does because you know this falsehood has started to die down, but cash is not always king.
Yep.
Um, it is king when it is exactly the same as the other offers because you're normally alleviating appraisal, you're normally
Hmm.
closing faster. Um, if they need occupancy, you can probably skirt some time that you can't do
Yep.
in a mortgage, but if you're offering less than the others, then the cash isn't better. Not anymore. And so point is that you gave up this great offer, and then a few days later you might call that agent back because now you're back on market and say, hey, are they still interested? And we might have gotten our offer accepted on another house.
Yep.
I can say this: while I'm not writing offers concurrently, I'll write an offer on a Friday and we'll still go see our showings on Saturday
Oh,
until
of course. Yeah. Oh, yeah. Oh, yeah. 100%.
because you just never know.
Right.
So
Nothing wrong with that. No, I mean, there's
so
nothing at all wrong with
so
that.
I have backup, right? I have backup. So you tell
Yeah.
me no, now we're writing an offer on this one, and maybe that one gets accepted. The only upside is I've been fortunate twice now this year where I don't know if that was that case or something other, or maybe it was all legit, but the first offer fell apart. And because, we did our part on the back end as agents and lenders and reached out and had communication and showed qualification and this and that when the first deal fell apart, we were not even the second highest, but they were like, all right, now we're going to go with the guy that's probably going to close.
Yeah.
Right. And so, it worked out for my clients. And so it can help some, but it certainly is not a great method.
Yeah.
Um, what else? I don't want to keep it too long, and I appreciate all the time you are giving. Um, but like, what else do you see? Whether it's just local, because I don't have a perspective of
Yeah.
something a couple thousand miles away, and it's always interesting. I want to talk to somebody in the Phoenix area, I think next week. It's just good to know. And also, I believe what happens out west eventually happens in the Midwest, anyways. So, is there anything more coming our way? Another wave of anything that you see out there?
Oh, I mean, I think right now No, I mean people people are just holding on. You know what I mean?
Yeah.
It's so the way the market is, it's tight. I think we're going to keep seeing money coming out of California. You're going to see if you have any investors, I would tell you start looking at Idaho. You're going to see Idaho go through the roof. Um, Texas, I think we're going to see a bit of a slowdown. I think that got a little hot. I don't think people are going to be going that way. I think Phoenix, Arizona, and Nevada, and Utah. That's what I was looking for. Utah, basically the Western Desert states, including if you add Idaho in there, are going to be next 5-10 years. You're going to see a lot of people moving there. You have everyone moving out of California from NoCal. They're going, Idaho, Wyoming. They're buying big ranches. We get a lot of people that because a lot of our business is coming east, so we see where it's going, and a lot of our agents are in California, and they tell us where their clients are going, and it's basically Nevada, Arizona, Texas, or Idaho. A little bit of Utah, but Utah has some other issues that I think the Californians aren't fans of. Some other constraints in their lifestyle,
Yeah.
but money is moving this way. I think, to be honest, I think we're in a market where you really can't predict the future. I think we're in a unique place. You know what I mean? Like we've had some really unusual things with COVID really happen. I think that made the inventory obviously even more restrained and constrained. And I think that at this point, like I said, the only things I really believe is I don't think it's a bubble because I think we're going to see a slow kind of pressure release when it comes to the supply crunch. But I don't see it tightening anymore. It's not like we're going to go down to 0 homes for sale or anything like that. I think we're basically as tight as it can be. People are still going to move. People are changing jobs. People are downsizing, upsizing, going to school. I mean, things are always going to happen. Life changes are always going to happen. So they're always going to be constant change. I think that we've had that artificially decreased because of COVID on top of a market that was already a little tight. And so I think we're basically at the tightest it's going to be. That's the way I see it. I think we're going to see a relaxation. I think it's a great thing. Most people think the opposite. They're like, don't you love when the prices are high? I said, no, I want to help as many people as possible. You know what I mean? Like, yeah, if I can help 10 people buy a $100,000 house, I'd rather do that than one person buy $1 million house. I don't know. I just help 10 people instead of one. For me, that's a better equation.
Yeah, well, I agree, and I also think it's a part of our job that does suck is telling people no, right?
Yeah,
So like,
100%.
hey, you didn't get the deal. Hey, the deal fell apart. Whatever. So without some of this craziness, I mean, we've had multiple offers going on. I've been around for 5 years and for 5 years, so and longer because I bought the house that I'm in 8 years ago and we had multiple offers 8 years ago. So, it's been happening. It's just that it didn't seem to happen on almost every single property like seemingly is happening now.
Correct.
And don't get me wrong, I'll send you 40 houses later that show that had price decreases. If you're still inappropriately priced, you still don't sell right away.
Yeah.
But if you're even within reason, people will at least take a stab at it.
Yeah.
And something we didn't really get to is that whole appraisal side of things, and that is, even with an appraisal guarantee, the deal can fall apart because the guarantee may have said, going back to my 675 deal, well, we'll give you the 20,000. Well, what if it actually only appraised for 625?
Yep.
Depending on that language, the deal might still fall apart because the seller's not going to sell for 645. They thought they were selling above 675.
Yep.
So the appraisal is still a big factor, and that's a big important thing when we're putting offers together and when we're listing our property. You have to have a starting point, and it has to be somewhere in the ballpark of where it's probably going to appraise, just in case, right? Just in case suddenly.
Yeah, you're 100% right because we've seen that where someone has overpriced the home and had accepted offers, but you just can't get it to appraise anywhere near. There's one on the west side of the state of Michigan, actually, where it sold for, I think it was 100,000 over ask. Mm-hmm. But the problem is they were never going to get it to appraise anywhere near that. So you weren't actually going to complete the sale because basically every time, I think if I remember correctly, they went through 3 different transactions, 3 different appraisals each time, didn't come close. And they had guarantees on it, but not enough to cover the difference. And so it's one of those things where you have to be smart and understand you want to maximize your profits as much as possible. But at a certain point, you're going to reach where you're doing yourself a disservice. You know what I mean? You're stepping over $1 to make a nickel. You know what I mean? That's how I look at it. Because yeah, I mean, let's say you're downsizing. You just made 3, 4 extra mortgage payments that you didn't have to make. You know what I mean? Let's say you're going to invest that money into something else. You just lost that opportunity cost. You know what I mean? So you have to take a holistic approach, a look at your financial situation, and not base it all on one aspect. And I feel like if you do, that's when things go sideways.
Yeah. Anything about the RPM, team that we need to know, other than anything we've already talked about that you wanted to get out there off your chest?
Not really. I mean, like I said, I'm not a salesman.
Yeah.
We're here to help. That's basically it. Michigan, Nevada, California. We do refinances and purchases, obviously. We're just here to help. If anyone has any resources, and honestly, like, we're available even if you're in a different state or you're moving anywhere else and you just want to chat or you have questions or concerns. Always here to help and be a resource to you. But yeah, we have obviously team members in Michigan. We have team members here, so we are local. If you want to meet with us in person, we're happy to do so.
Yeah,
we're
right.
not all
And stuff. So for sure, it doesn't have to be a long distance relationship, so to speak.
Yeah, of course. I mean, my ideal is, hey, if you're in Michigan and you want to fly out to Vegas to meet me, I'm down for that as well. In town, it'll be the best application you ever put in. You know what I mean? Like, we'll have a great time.
Guaranteed.
Yeah.
All right. So then someone has mortgage needs. How should they reach out to you or the team? What's the contact you want to put out there?
My cell phone is 734-644-0362. Or you can just shoot us an email at rpmteam@fairwaymc.com. So rpmteam@fairwaymc.com or 734-644-0362.
All right, people with the V. That'll wrap it up, brother. Appreciate it.
Thanks for having me on.
All right, we'll see ya.
Yep, bye.